Traders, welcome to week 2 of the UTG Ultimate Beginner Crypto Trading Series. It's Tex and Ads here with you, where today we're going to be looking at support and resistance. And if you haven't checked out video 1 yet on candles and candle structure and some of our favorite patterns to look for in the market, be sure to check that out at unitytradinggroup.com. Also, stick around to the end of this video where Ads and I jump into the charts on TradingView and show you how you can use support and resistance in real time. So let's get into it. So support and resistance, one of the most widely used trading strategies in any market, is surely support and resistance. From beginners to even the most advanced traders, support and resistance is a fundamental technique that 99% of traders implement when scanning the markets. Just because it seems simple, it doesn't mean that it's not effective. So don't ever overlook the basics. And we see that way too often with beginner traders. They've got 100 lines and indicators and crap all over their charts trying to confirm their own bias. Don't be one of those traders in the beginning. Find what works and stick with it. The KISS method really does apply. So in the simplest sense, support and resistance is when a price tops out at a point where the price can no longer go upwards and it starts trending down and pulls back. That's resistance. And for support, once a price starts trending down and before it starts trending back up again, it hits a point where the price is held up from going any lower and bounces to push back again to continue the trend. So think of support and resistance like walls or barriers to stop price going in a certain direction. And once those walls have been identified, it provides traders with potential areas to exit the market at resistance or re-enter in the hopes that price will continue to go higher. So we can see that here. So we've got resistance in a bullish sort of trend, and we've got support in a bearish sort of trend. So as things are bullish, we move up, hits resistance, we come back down, hit support. It's pretty self-explanatory. So identifying levels of support. When searching for support, look to find it at the bottom of a downtrend once the bearish trend has come to a stop and buyers are looking to re-enter the market. For us, hopefully pushing the price of your coin higher. So once price begins to get the attention of traders, increasing buying volume and demand causes the falling price to bounce and begin trending upwards, creating a level of support. So once these levels of support have been identified, they provide us with valuable information on whether to jump on the bandwagon and ride the gains, or see if the area of support and the amount of buyers was significant enough to start pushing price higher. Or in a lot of cases, this is where we need to really consider this an area of support. Was it just a temporary but failed attempt from the buyers or the bulls to hold up price before we continue going down to the next significant level of support? We see that quite a bit. This is why we think of them as areas. We get to a level of support and everyone goes, yep, I'm jumping on. I'm getting on this. We're going to definitely bounce off this. And then we continue going down to another level of support. So that's why we consider them as areas of interest and not gospel. So this is why we wait for stronger confirmations of a trend before buying into areas of support, which we'll get into in just a second. So if we have a look at this chart here, we can see we've got a bearish trend here, but this huge, big bearish candle. And then rather than breaking through or continuing down, we've had this bullish candle, and we continued, or we created a new bullish or upward trend. So then where the price bounces from that candle, that becomes our first level of support if there's no data here previously to show us. So this coin here actually that I took the chart from was 1BTC. That's one of the newer launched Binance coins, or the Binance platform coins. So there's not a lot of data here to tell us what was going on beforehand. So this was the first major level of support that we found, because we came right up here after it launched and had this like spastic run upwards. We come all the way down, gave all those gains back, and then this became the first level of support. We had quite a nice bounce where this became resistance that we'll see in just a second, and then we started a new downward trend, and then we found support again at the same level, funnily enough, many weeks later. All right, identifying levels of resistance. The opposite of support is, of course, resistance. This occurs at the end of an uptrend where the formerly bullish trend was stopped at a point where it was unable to continue pushing higher. You usually find in the past that the same level of resistance occurred where price was previously stopped from going higher, which would have helped to tell us that it was time to exit our positions or be prepared to if the price didn't continue upwards. So that's a mistake that we see a lot of beginner traders making. We get to a level of resistance and you go, well, I'm selling right now on resistance, or I'm buying right now on support. That's why we consider these levels of support and resistance areas of interest to see what the preceding candles do. We don't just want to sell here, and we don't want to just buy here, because that could be potentially, we could bust through resistance and continue this bullish momentum, or we could bust through this support and continue this bearish momentum. We don't just buy on support or resistance unless we've got a very significant indication that that is definitely going to be resistance. So when resistance occurs, it tells us that the bulls have lost control and buying volume is drying up. If we fail to break through resistance and continue the upward trend, the sellers or the bears are in control, as they were here. So we can also see that support and resistance isn't just straight lines plotted on a chart either. Anywhere we have multiple touches on a trend line, this indicates that it's a level of support or resistance. And then the more touches, the stronger the trend. So we've got our horizontal lines here as well, but we've also got this diagonal trend line here, which has multiple touches where prices failed to break through. So that indicates that's a level of resistance. We always draw that at the top of the candles, or the wicks, or the bodies, whatever you like. Same thing can ring true with support. I suppose if we were to do something like this, it's not much of an example, but if we were to draw a horizontal line here, we could see that we maybe had one, sort of two, three touches, or two touches here, three touches potentially in this overall bearish trend, where we could have seen that we maybe could have potentially bought here, ridden up, come back here, bought here, ridden up, bought here, ridden up, bought here, ridden up. But those are some more advanced trading strategies. But really, in the overall scheme of things, unless you're sort of looking at a daily chart, this is a 4-hour chart, it's not worth trying to catch those bottoms or really catch those tops even. It's just sort of really a waste of your time, and you probably don't have enough time to dedicate in front of the screens anyway. So check below for more bonus tips about the number of touches and the strength of the lines of support and resistance. I kind of just touched that then, and I'll give you the heads up now. The more touches, the stronger the trend. We want to see 2 touches to confirm it, or 2 touches to tell us that there's a point of support or resistance, and 3 to really confirm it. All right, it's not always exact though. And while support and resistance is an accurate way to predict where price may be held up or pushed down, after looking at previous data, it's not always exact, but it's often pretty close, particularly in crypto or on lower alt cap coins due to the liquidity, aka the market cap of the coin. So, for example, if you were trading FX or commodities or indices, let's use FX as an example, which we do trade in the inner circle. There's trillions of dollars in FX market. So lines of support and resistance, trend lines, Fibonacci, any indicators that you might use are often far more respected because there's such a high volume of money in the market, as opposed to crypto, which at its peak was 750 billion, or we look at it now is 150, 160 billion. So things aren't often always as respected, and we know for a fact that there's manipulation in the market as well. So again, why we see these as levels of areas of significance or areas of interest. You know, you might see, for example, a coin that does 50 or 60% in a single candle, and it's a very low cap coin. It might be 200 or 300 on coin market cap. That's because it doesn't take a lot of money to move that coin. And the same can be found as well when we see really serious levels of rejection, because that could literally be a single person that's a whale of that coin taking their stack out, and then that particular coin's market cap just crashes because of just a small number of individuals. We see it in BTC as well. There's whales, there's a small minority of people that hold most of the Bitcoin in circulation that can control this market anytime they want. So don't always just jump in thinking that things are going to be exact and play out to a dime. It doesn't work like that. So as our confidence and skills increase in trading, we will be able to use indicators and other trading techniques to help us identify whether these minor breaks through levels of support and resistance are confirmation that we're continuing the trend or not. So why it's good to wait for confirmation. To help you better understand support and resistance, think of them as zones or areas of interest rather than definite levels where price must reverse. Meaning that when price starts nearing a level of support or resistance, pay attention, but don't automatically assume it's time for a reversal. And I've spoken about this a little bit throughout this video, but we'll kind of get into it a little bit more now why that's the case. So Savvy traders will wait, 1 to 2, maybe even 3 preceding candles once they've closed above or below those areas, being the support or resistance, to give confirmation that the trend is continuing or reversing. So as we can see below, there was a strong bullish engulfing candle that broke above a previous level of resistance, which we can see just here after that previous downtrend, but was quickly smacked down with a number of following bearish candles with the price almost hit those all-time low levels, very close to. So if we had jumped on this green candle, which a lot of traders would have, just purely because it was a nice bullish engulfing and it broke ever so slightly above that previous resistance, some people might have put their resistance at the wick, but that's not really an organic move. I would rather see it and the candle body here for the tweezer top rather than the candle. So if we had jumped on here on this green candle, gone bang, we'd go, all right, well, we're kind of still in profit, bang, bang. And then a lot of traders will just hold this thinking that we're going to have another big move offwards from a previous level of resistance. And you would just find that you'd come all the way back down and you probably lost 30 or 40% if you stack, depending on what the coin is. Like we've said here, if you had just jumped on because you saw that bullish engulfing candle break through previous resistance, it would have been a tough loss if you bought in and held thinking price was going to continue or keep going up after that, as most beginner traders do. So that's why a lot of people bought the top of Bitcoin and held it all the way down. That's hopium, baby. Don't be one of those traders. So don't forget about volume either. One thing we see a lot is traders that forget to take buying or selling volume into consideration when looking to enter or exit a trade. So for example, if we see price heading towards a previous level of resistance and continue the up, how can we tell that there are enough buyers in the market to push price through this resistance and continue the uptrend if we don't pay attention to how many people are buying? We see this a lot. No volume, well, kind of much equals that it's very unlikely that we break resistance in a lot of cases, unless there's some manipulation or it's a lower liquidity alt cap coin like I spoke about beforehand, where it doesn't take much money to move the market and doesn't really sort of respect those trends. You would look to maybe the top 10 or 20 altcoins and BTC, of course, to where this would ring a little bit more true. So this coin here that I'm charting is ADA. So you can find the volume indicator on your TradingView account by going to the indicators right at the very top of your screen and typing in volume. There's a couple of different types of volume, but just go for the standard volume indicator. That'll then show you the bars of buying, which are the green ones there, and then the selling red volume. So you can see on the chart above there. So we've got this tweezer top here. We've come to this previous level of resistance. And then one thing you see a lot is that when traders get to that point there, say, for example, there's this pitiful bit of volume here. Traders go, oh, we're so breaking through it. We're done. We're going through it. Well, it's not always going to be the case. We want to see that there's a lot of buyers in the market or there's some decent buying volume here to tell us that we're going to break through this level of resistance and continue this upward trend. A lot of people will look at this type of volume and see that we've broken through, go, yep, that's it. We're breaking through here or we're busting through. It doesn't really often work like that. We want to see decent buying volume. And again, as we come down, we're going to see a pretty dramatic increase in selling volume with the odd little bit of buying volume, but it's not really going to tell us too much unless we see a consistent amount of green buying candles down the bottom here. So let's continue down. Support and resistance flip. So just as it sounds, when a point that was previously resistance becomes a level of support, a support resistance flip has occurred as per the image here. So we hit this level of resistance, we've busted through, it's then become support. We've broken through, it's then become resistance, bang, it's then become support. That's the support and resistance flip. Very simple. Pay attention to it. So here are some of the bonus tips. When the price passes through resistance, that resistance could potentially become support if a flip occurs, of course. The more often a price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is, as I showed you before with that diagonal line on 1 BTC. So when a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance had been holding. So if we see a really dramatic bullish candle bust through a level of resistance, then that probably tells us that it could be a good indication that we're going to continue that upward trend or that we've now gone from being bearish to bullish. But Again, always look at these areas as areas of significance or areas of value rather than gospel. And I will apologize about my voice tonight as well. I've got a cold, just that time of the year. So I really hope you enjoyed PDF 2. In just a second, Ads and I are going to dive into the TradingView charts and show you on Binance Coin how you could have made some seriously profitable trades over the last 12 months or even just recently, just using support, resistance, and buying volume. You don't need a great deal more than that when you're looking at some of these coins. Obviously, there's so many indicators and other techniques we're going to show you in the following weeks. But as a fun little experiment, we're going to see how just using support and resistance and buying volume can help you to make some profitable trades. If you have questions, come over and visit us in Discord, Twitter, Facebook, and on YouTube, all of our reviews and some TA behind the scenes stuff as well. We'll see you on the charts in just a second. But after that, we'll see you next week. All right, traders, here we are on the Binance Coin. It's Tex and Ads again with you. Really hope you enjoyed that PDF. Now, let's put it into real life on Binance Coin. And currently, we're trending on the 4-hour. You can see that we've got our levels of support and resistance there. And Ads is going to sort of explain why these levels are significant. And then we're going to show you how it works to real time, current time being the 12th of June, 2019.
How you doing, everyone? So what we've got here is support and resistance. All right. So right down the bottom, we've got our support. Now, how we've identified this level is we've got a lot of wicks and a lot of candle structure here that has failed or that is used this level to bounce or to be pushed off from. And again, with resistance, we've had this large impulse move here on the 24th of March that has come up and that has been rejected at this point. So we know immediately that there is a form of resistance here. So what we're going to do is we've found these two levels. We're going to go through and we're going to play this chart over and we're going to see how these levels have been respected. Here we go. So we've been rejected once and again, third time. Okay, now what's happened here is we've pushed through our support level. So it's been touched so many times that it can no longer hold. Now what happens here is when, like Ty said earlier in the video, that we can have this flip. So support does become resistance, and we'll see how that plays out. So there we go. So we've had a flip here. All right, so this wick has come and has tried to push through our resistance. It's failed. Come back down, and then the second go we've pushed through, and it's now become support once more. So we've pushed off our support level, smashed right through our resistance. It's become support again, and now we've pushed back through it, and now it's resistance again.
So, Ads, before you do that, would you say that because we've seen two big impulse moves off that support level, that's a pretty significant level of support now we've identified? Would that be right in saying that?
Absolutely, absolutely. So we've had two, what he means by impulse moves. We've got one here where price was held here at support, pushed up, and then again, price was held here and pushed up. We're looking for significant moves out of a price zone. Yeah, so that's what he means by impulse moves.
Yeah, exactly right, Ads. And we can see there, these are 4-hour candles. So we can see there at the 25th of March, we've had that really big 4-hour candle. We've come back down, we've hit resistance, turned support, turned resistance. And then again on the 19th of April, again, we've had another really big move. And that's in the space of one day where how much percentage have we done there, Ads, within that support and resistance level?
Let's have a quick look. So even if you were shooting for resistance, you would have cleaned up a tidy 16. And if you caught the top, if you're lucky enough, then you're looking at a tidy 27.
Yeah, and one thing that I want to mention as well, let's have a look at the percentage from where it broke resistance there, Ads, on the 19th after that second big impulse move to the top of. So let's put a percentage chart from the top of that resistance or from that resistance level to the top of those wicks. Let's see how much we would have made if we had held it. Go right to the very top. Yep. So that's it. So that's 11%. So one thing that traders will do don't be afraid to get out at that significant previous level of resistance as a beginner trader. Don't try and hold it all the way to the top, because you'll be holding saying, yeah, we've broken this support at 43310 and we're going to the moon. Not quite. You can see there's a pretty decent level of volume around that time period there, but don't be afraid to get out at that level of resistance and be happy with your 16%. 16% is better than 0%. So
Absolutely.
yeah, that's just one very important thing to notice, particularly as beginner traders. We get way too emotional. We say, yeah, we're going to the moon. This is going to, make me huge dollars. One thing that we mention all the time to our students inside our inner circle, or even inside the Discord, is that small gradual wins are far better than trying to shoot for the moon every time. I'm more than happy taking 5 or 6% trades here or there, or 16% trades in this situation than trying to catch every top and trying to catch every bottom. It's far easier to do it that way, and you build your confidence. The more you get wrecked out in that market, the more it's going to smash your confidence. So just be content with the profits that you've made, and don't try to go chasing any more than what's needed.
The best advice that I would have been lucky to have when I started out.
Absolutely. So let's have a look here. Let's press play and see how this plays out.
Ty, we can't deny that these levels are indeed significant, and we saw them so long ago.
Yeah, absolutely. And once we would potentially be confident to say, all right, we've broken that previous level of that very strong support has now broken through. And it would be at that point where, as traders, if you had held all the way from the top, like so many traders do, we go all the way down to the bottom there around May 13. If you had have gotten out at that previous support, let's have a look at the percentage gains that we would have saved ourselves at. So if we had gotten out there, 22%. So one big mistake that a lot of hodlers do, as in traders that hold their bags rather than selling because they're running on hopium, as they call it, hoping that the coin's going to keep going and going and going, you'd be a further 22% down if you hadn't have sold out at that previous support. And then we've come back up. We've seen a really big, sharp price volume increase there as well. We've gone up. And then yet again, we've hit that pretty significant level of resistance. We've come back down, and now we're trending sideways along that area of support after June. So this is actually current time right now.
Yep.
All right, so what we're going to do now is we're actually going to zoom out to the 1 day scale. And let's have a look at some previous levels of resistance and support and how significant they were as we go left and have a look.
So looking for support, if you were charting this yourself, you'd be looking for prices where, a line where price would be pushed off from. And then for resistance, you'd be looking for the polar opposite, where you'd be looking for where price has been held and been rejected, something like that, I would think. And then like Ty did mention earlier, you've got the flip, and it's quite significant. So pushes up to resistance, pushes through, uses it as support, all right, comes back down, support again, pushes back down, you've got support as well, pushes up, flips to support, and then back down, and then it just keeps ping-ponging between those levels, Ty.
And one thing that I want to mention as well, without overcomplicating things a little bit too much, but one thing that I look for, and many traders do, is buying volume. So we can see right at the very beginning of that chart, we had all this buying volume, which is indicated by the red. And we can see it again at the start of 2018. And one thing that was a little bit weird, we see that really big push to the middle of June there in 2018 without a ton of buying volume, but then we sort of see a pretty significant decrease in buying volume, which maybe would have helped to tell us that, all right, prices are going down. If there aren't buyers there to hold the price, the sellers are going to start to take over. And we did see a little bit of red there and some selling volume too. And then we can see at the start of 2019, the volume started picking up again. And as our friend Cole Garner says, volume precedes price. You can see that on the Trade Hacker podcast, where we talk to Cole about market cycles. That was one thing that he said that really stuck with us from that interview, is that volume precedes price. As we see an increase in buying or selling volume, the price is often going to follow it.
That's right.
All right, guys. Well, you can see there how on the 4-hour and the 1-day timeframes, we had have just been trading on the 4-hour. We may have missed some things that would have occurred when we looked left, as we said. So really hope you enjoyed this episode of the Beginner Crypto Trading series.